Traders, how are you? We've got a live trading video for you today. The market's already moving, so you can see we're going to get straight into it. As you know, I don't mess around. If you're interested in how professional traders trade, you're in the right place. If you have no interest in how proper professional traders run this as a business, well then there's plenty of other videos, your sport for choice, for how not to do it. But it seems like you want to learn how professional traders do this, so you're in the right place. So let's just get on with it. You can see the market's moving. It is my live account as always. It's an actual trade I took today, so I can't wait to get into it. First thing to notice, right, is that actually I've already had a losing trade. The market is kind of being in this very clear range today, as you can see overnight. Wasn't sure if it would break out for a variety of reasons, but it didn't. Okay, I took a trade expecting a slight short squeeze. The market has been moving down quite a lot recently, so I thought maybe we were due for a little bit of a pullback, so we would have anticipated a break of this range. We didn't, and it actually broke down again. Now you're going to see me actually do the opposite now and get short in this region, but whilst that's happening, I just want to mention that I don't see enough people doing this. They're not really thinking about using info from a losing trade, right? It's very, how do I say it, peculiar for me to really see this from retail traders. Normally it's take a trade, if you lose, move on. Actually, there's a lot of information in this trade. It's the manner in which it moved down. You can see here, it just kind of moved with absolutely no opposition. So it's the manner in which I took this loss. The market just moved down very, very quickly, like a bullet, very little buying coming in, which suggested to me that actually the original sort of range is likely to hold. Okay, so my point is there's a lot of valuable information, even though I lost in the initial trade. I lost $300, not a large amount, but I gained a lot of information out of that. Okay, so really important to realize that. Now I have decided to go short and see if we can complete this range, and there's a number of reasons for that. Okay, now the short actually made sense to me. That's why I'm not too bothered about sort of changing from a long and then suddenly going into a short. Typically I wouldn't do that, because if you're gonna be long and then suddenly go short, that probably means you're not too sure about what the market's going to do, right? So you don't want to be changing your mind too often. But the original idea I had in my mind was to go short. I just thought temporarily we may get an opportunity to take advantage if there is a slight pause in those shorts. Okay, that wasn't meant to be, and I'm going to just talk to you a little bit as this trade plays out about why I actually think as the market turned around, it was actually still a good idea for me to go short and go with this direction that was the opposite of what I'd been doing in the morning. So first things first, the market has actually been quite bearish recently, and I think one of the things I very rarely hear talked about is the 10-year interest rate yield. It doesn't matter if it's the 2-year, 10-year, whatever denomination it is, or term structure I should say. The 10-year yield is at, I believe it's 16-year highs. Okay, now that's clearly unsustainable for it to just keep going up and up and up, and for the rest of the market to do the same. It's not going to happen. Obviously interest rates going up are going to make investors nervous, right? They're going to cause markets to pull back eventually. So that's what we've seen. Doesn't mean that markets can't go up at the same time, but at some point something's got to give. So we're starting to see that basically. The second point is we're also seeing that stocks have lost a little bit of their impetus. Okay, so let me just basically highlight it in the most sort of visual way I can for you, because obviously words are one thing, but to actually show you in graphics, in sort of data and evidence is the best way to show you this. So you can see I'm waiting for the market to go down, very relaxed. I've got into this short trade. I'm now up 475, so kind of netted off the loss from earlier, but we're still waiting for the market to go down. So it's a good time for us to just have a look at a few reasons why the market has continued to go down. So as I said, treasury rates have been going up, right? So you can see that here. Can you see? It just goes to show that it is having a negative impact, because what are we starting to see? We're seeing the equity market being impacted negatively by that. We're seeing even foreign exchange being impacted negatively by that as well. So you see pound yen here. And then finally, look at crude oil. Crude oil has also been not necessarily dragged down by rates, but it's being dragged down by the market overall, right? So we're starting to see a lot of assets start to sell off because the rates are going up. Okay, so can you see rates are going in one direction and all other markets are going in the other? And here's irrefutable evidence of that. Okay, so and I don't see people talk about this stuff very often, so I do think it's a good opportunity for you to see something like this, something different to what you might be used to seeing. And then just the final couple of things I'd made a note here is that we have had quite mixed data. Okay, so this week we've had the ISM manufacturing, which has, okay, it's improved slightly, but it's still negative under 50. But then on the flip side, you've got services, which is above 50. So quite mixed data. Okay, so the market's kind of lost a little bit of impetus. And then just finally, volatility on down days has been increasing. Okay, so you can see that here. Typically, in a typical year, you'd see around about 30 days with down moves of over 1%. Okay, that's the average. So I think that's something like 13-14% of trading days throughout the year typically have down days of around 1%. And we're seeing in 2023, we're starting to really make our way towards the average. So the market is getting very comfortable with having quite large down days. So what is that? That's good for you if you're going to be short, because it means that you're likely to get some momentum. Okay, so that's why I was quite happy to, go with it, because the market has been exhibiting behavior that suggests that moves on down days are, the market's quite comfortable with them, basically, as the evidence suggests. Now, just final point to make, it's not all doom and gloom. Obviously, you can see that the market has, and I mentioned this in the last video, had such a massive rally, around 22%, I think, off the lows. So it's normal we're going to get a little pullback, okay? There's nothing to suggest the market won't continue. It's just right now it's run out of a little bit of impetus. And as I said, something had to give. Rates going up, a lot of that down to the Fed being quite non-committal to lowering rates in the near term. And obviously that's caused the treasury market to sell off quite a lot, okay? So hopefully that was useful for you. Let's just actually fast forward this a little bit, and you can see that very little drawdown. The market does eventually make its way quite substantially down. In the end, I did end up with just over $800, and as you can see, the earlier range, we completed it. Okay, it did in the end. The market really had quite a big sell-off going into payrolls tomorrow, but at the end of the day, I wanted to play it cautious, made all my money back and some, so $812.50, and just completed the range, okay? So it kind of made strategic sense to take it off there in case we had quite a big pullback before going down, okay? And I didn't want to be part of that. Obviously, I'm a short-term intraday trader, so it made sense. Anyway, lots of learning points for you there. I hope it added value to your trading. I can't wait to see you next time.